Good morning, this is Andrew from My Investor's Place. My Investor Place is a social networking website for investors to network, post your blogs, discuss things on our forum. The reason I made this video this morning is I want to talk about an idea that basically the phone's been ringing off the hook. And the question that's been repeatedly posed to me is, where do we put our money? It seems like all the rules of the games have changed. All the norms have changed. And what does that mean? One quick example is you have the auction rate security debacle where people tried to get a little bit higher return on their money with short-term paper with these auction rate securities, and earlier in the year this blew up and these people are not able to redeem their money. Now the money markets are in question, and the reason they're in question is what are the underlyings in the money market. This last Monday, the Reserve Primary Fund, which had about $62 billion of assets, you could say blew up because they had owned some CDOs, which are collateral as debt obligations from Lehman Brothers, and they went from $62 billion down, in a couple of days they lost $40 billion. Really this brings us to the point, what do we do with our cash? And some people think they're safe if they just leave it in a bank with FDIC insurance if they have less than $100,000. Unfortunately, I kind of care to differ. The FDIC is going through all kinds of crises. There's been 13 bank failures so far this year. I believe there's 117 that are on credit watch with the FDIC, and just one bank alone this year, IndyMac Bank in California, took out about $10 billion out of the $53 billion kitty that the FDIC has. So really the Fed only has two choices, either raise taxes or print money, and it seems that the Fed is chosen to print money. So we're into some interesting times, and then the question again is, what do we do with our money? I don't trust the banks, I don't trust the Fed, I don't trust the money markets because I don't really know what kind of toxic paper that they're holding, and the only suggestion that I can make for you right now has been what I've done with my own money, is short-term U.S. government securities, again for the simple fact that they can tax and they can print money, and historically this has been the safest vehicle. The caveat can be if the US dollar weakens, and the way to protect yourself against that is you can always hedge the dollar. You can buy contracts, futures contracts, to hedge your dollars. These are very tough times. One needs to think of the return of money.